In the early years of this industry, we're still not a very old industry, but there was this sense of just put on as much hash rate as possible and your stock price will do well. And what I enjoyed seeing, or was interesting to me, was seeing some of the most impressive growth numbers in hash rate did not necessarily correlate with growth in shareholder value.
As you said, in the past, if some miner reported like aggressive growth with their hash rate, generally their stock performed well. But that was not the case in 2025.
This happened last cycle as well, right? With everybody was called blockchain, and then all the blockchain names disappeared. So I think each cycle has its own trend. It's interesting to see.
Welcome back to Hosting Bitcoin, where we speak with the people who are helping to build the future of energy and money. Today's guests are two of the sharpest minds tracking the pulse of Bitcoin mining across the globe. Nico Smid and Cindy Feng are co-authors of the 2025 Bitcoin Mining Review, a deeply researched, data-rich report that dives into the global state of hash rate, hardware, energy trends, public companies, AI and HPC deals, and the financial forces shaping the mining industry. This isn't just a year-end wrap-up, it's also a map of the future for the industry as well. Together, Nico and Cindy are helping the industry to see itself clearly, to see where capital is flowing, what strategies are competitive, how energy markets are evolving, and how the best will be successful and competitive in the future. Welcome, both of you, to Hosting Bitcoin. I'm so excited to have you, Nico and Cindy. Thanks for sharing some time with me.
Thank you,
Thank you
both
for having us.
So I'm really excited. We're recording this at the beginning of 2026. You guys just came out with a report called Beyond the Zeta Hash Era, which probably most people don't even know what a Zeta Hash is, but it's a huge milestone in the growth of the Bitcoin network. And very comprehensive report, very well written. I'm excited to unpack this for myself and just understand more how we can navigate the mining industry successfully. And really excited to hear from both of you what went into the report, what you learned from it, and just have a conversation around everything that's going on in the mining industry. I mean, there's more than we could ever cover in an hour,
Yeah,
even
so
many
much.
hours. But
Yeah.
hopefully we can make a dent that helps people navigate the space better. So before we get into it, would love to have you both introduce yourselves. Nico, you've been on the podcast before, but if you can let people know who you are, a little bit about your background, and then we'll go to Cindy as well.
Sure. So I'm Nico Smid. I'm the founder of Digital Mining Solutions. And we offer three types of solutions or services to miners in the space. We do a lot of market intelligence, market research. And in that sense, we also publish this report. But I also have a popular newsletter with over 16,000 subscribers, and I provide master classes, which I've done with Abundant Minds. A second service that we offer is consulting. So we do assessments of business plans, business models. We do due diligence on investment opportunities. And then lastly, we also provide brokerage services. So match make operators and builders of sites with investors and miners.
Okay. Hi, everyone. I'm Cindy Feng. I'm the founder of the Bitcoin mining stock.io. So my platform is a data and research platform for digital asset equity, basically crypto stocks. We started with Bitcoin mining stocks, and last year we expanded to a broader market, including other public companies related to cryptos or digital assets. So basically, we provide data and some tools for investors. Beyond that, industry players, they can find some insights on our platform, benchmark against competitors or peers. And in December, we also launched the API. Basically, some business or some developers, they can use our data to enrich their product or their platform. So thank you for having me here today.
Awesome. Well, thank you both for introducing yourselves. First off, can we define what is a Zeta hash?
How about Nico?
Now you got me. Like many hashes that is exactly, but
How many
I think
digits?
it's like it's a very significant milestone for the Bitcoin mining industry, because the industry as such, like it's only yeah, I would say an industry for about 7 years maybe. It was 5 years ago, or the start of 2020, so a bit over 5 years ago, that the network crossed 100 exahashes. So crossing a Zeta Hash is a 10x within a bit over 5 years. So I think that shows how significant it is. So it's an industry that really matures, and is matured now that we crossed that level. And also interesting to see is that we crossed that Zeta Hash level, and we didn't look back. So we didn't dip down below that level. We stayed above that one Zeta Hash.
That's important to note, is that this is a huge milestone, and this is still a very young industry, and things are changing very quickly all the time.
Yeah.
Um, I'm curious from both your perspectives, what was it that kind of set the stage for 2025? What context were we operating under? What was going on in the market? What do you feel like made 2025 different than other years, both in price action as well in the mining space in general?
Yeah, if I can kick off, uh, of course, everybody that's involved in Bitcoin is looking at price, right? And we had a year that closed in the red. I think we all started the year very bullish. If we looked at previous cycles, that year post halving is a year where you see the price going parabolic. Uh, Having a blow off top in many cases, and this time around, yeah, we closed slightly in the red, which is different than previous cycles, and I think, yeah, many anticipated that parabolic phase, including many miners. So I think that's a huge difference, and something that's, yeah, set or had a big influence on the 2025 context. Uh, and then on the hash rate side, yeah, we saw hash rates growing, so it didn't respond to those compressed margins. So I think those dynamics are very interesting.
So adding on that, I we all see like last year, Bitcoin closed like in red. So 1 year again, it is actually negative. And in comparison, because for me, I focus on public mining companies, so it's easy for me to look at the price, right? So when we index my public mining companies, the overall performance from the sector actually end around I think a little more than 150%, which is very different. One is like over 100% again, the other one is negative. So in the past, we always treat like Bitcoin mining stocks as a proxy,
Hmm.
high beta proxy of Bitcoin. But in 2025, somehow we see two factors kind of decoupled in some way. But I want to add that even though I said that overall performance from the sector is much better, but when we look at the individual company, the overall pattern, the price pattern, still follow the Bitcoin. So if Bitcoin price dipped, stock generally dipped even more, and the opposite goes to the opposite. It's just because some new trend emerged in 2025, which affect mining stock price. So that's something very new from 2020, like in 2025.
Maybe yeah, I wanted to add, like, uh, year over year it's been flat or a bit in the red, like minus 6.3% in the red. But throughout the year a lot happened, right? Like in January, we marked the all-time high, and then dipped all the way to 74,000 K, and then went up again, marked various all-time highs, getting to 126, and then diving back to 80,000. So yeah, if you zoom out, it looks like nothing happened, but if you zoom in, you see a lot has happened. And Related to price, Bitcoin's market cap crossed at $2 trillion level for the first time in 24. But last year spent a lot of time above that $2 trillion market cap, more than 200 days. And that's very significant because for institutional investors, liquidity is very important, and reaching that market cap allows many institutional investors to get involved.
So for like total market cap, I also want to add something. Obviously, we see institutional fund flowing to like Bitcoin, but the same applies to Bitcoin mining sector. So the start of 2025, we probably have like a total market cap from public mining companies was between 30 billion to 40 billion. But the end of December, we were near like 70 billion. So more than almost doubled in that way. So again, we can see the interest from the capital market, from both the like retail market as well as institutional fund.
Yeah, I wanted to ask you a little bit about that, Cindy, which is we've been talking for the last couple of years now about the institutions are coming in Bitcoin. We've got all the ETF launches and everything. Is the institutional interest there for mining stocks? And does that have something to do with why mining was kind of uncorrelated or didn't really follow the same pattern that we've seen in previous years when it comes to how it responds to the underlying Bitcoin price?
So first of all, I would say yes, the institutional interest was there, and they actually add more capital, or they invested more in terms of dollar amount as well as the number of institutions.
Hmm.
So when we look at institutional sentiment chapter of the report, we can say almost every public mining companies with market cap more than $100 million, almost every of them has more investments in terms of like dollar amount and institution numbers. Obviously, there is a few occasions, but in general, you can see the trend. And another thing is, I think to answer your question, I have to say, last year, since we see HPC or AI like multi-billion dollar deals, I think that really trick the interest, because since then we see the companies with multi-billion dollar deals, their stock price increased a lot. The same with investment. When we see who gain more dollar amount and who gain more more institution numbers, how many institutions invest, generally this company they got a lot more compared to like a pure player, the company that only focus on Bitcoin mining. So yes, interest is there in both like Bitcoin mining itself, but I think another factor we have to look at is HPC and AI.
Yeah, did you see that the mining companies that chose to really be aggressive with their AI and HPC strategy were kind of the ones that held up the market and actually outperformed? I mean, it's almost like the Bitcoin mining stocks were not performing well because of Bitcoin mining, but because of this other thing that's entering as an influence. I'm just curious if you agree or if there's any exceptions to that.
I would say, in general, I agree with that. As I explained, we see how the performance difference between like hybrid miners or the company who are aggressive with HPC and AI, or the companies who only talk about Bitcoin mining. We can see the gap, like in terms of performance and the investment interest.
I think it also has to do with announcements, right? Where like there were some big names, big partnership announcements, and that obviously excites investors and leads to increasing stock prices.
Yeah, so in terms of like announcement, I want to add there, very interesting. Last year, when we talk about multi-billion-dollar deals, generally it involves big names like Google, like AWS, or like some like a hyperscaler. So they actually it brought the market. So previously, maybe people who were interested in Bitcoin mining stocks they only know that much. But now it can open such like announcement opens the gate for broad market. People who were interested in AI, they just follow like mining stocks now.
Yeah, what I love about this, I mean, anybody, the report link will be in the show notes, is how granular you get with individual businesses and how they're making decisions, and the correlation between installed megawatts and hash rate and what proportion they're dividing up. I mean, it's very comprehensive, and it tells a really interesting story, which in the early years of this industry, we're still not a very old industry, but there was this sense of just put on as much hash rate as possible and your stock price will do well. And what I enjoyed seeing, or was interesting to me, was seeing some of the most impressive growth numbers in hash rate did not necessarily correlate with growth in shareholder value. So I'd love to hear what you think about that.
So that's another thing very interesting in 2025. As you said, in the past, if some miner reported like aggressive growth with their hash rate, generally their stock performed well. But that was not the case in 2025. And for example, Bitdeer, Hive Digital, those two companies, they had over 3%, 300% of the growth with the hash rate compared to the start of the year or the end of last year.
Which is crazy at that scale, by the
Yeah,
way.
exactly.
That's so much hash rate.
Yeah, but what do we see? They end the year with negative growth. So you can say the interest was not about the hash rate anymore, at least for the capital market. Now HPC AI is the new sexy narratives, and for that, some companies even changed. They said, "Oh, we're not a mining company." They don't call themselves like mining company anymore. They brand them as energy infrastructure. So
This happened last cycle as well, right? With everybody was called blockchain, and then all the blockchain names disappeared. So I think each cycle has its own trend. It's interesting to see.
So as Nico mentioned, that actually reflect on like name changes of companies. So you probably noticed some companies how they change their names.
Yeah, it used to be Riot Blockchain, and now it's Riot Platforms, and there were, I think, a few others that did some minor pivots.
Yeah, absolutely. So we can see the market interest is changing, or at least the narrative is changing. So to appeal to certain market, many companies are making certain adjustment as well.
If I can get on the interviewer chair, Cindy, like in previous cycles, maybe people found it hard to evaluate Bitcoin miners as well because they didn't know how to. Do you think like investors now understand the mining business better? And with the HPC AI play, like they're still figuring out how to evaluate those stocks still, because what I've seen is that there's different types of AI HPC plays, right? So there's players that buy GPUs and they host them at third parties. There's others that provide hosting services to companies that are looking for rack space, and then there's also companies selling compute, let's say. So do you think that has to do that investors still need to educate themselves or learn more about how to evaluate these companies on the AI HPC side?
I think absolutely. So, for example, previously people were not familiar with Bitcoin mining. So, like one simple indicator is hash rate growth, or how much Bitcoin produced. So that's very easy. But now, when investors or people are more educated or sophisticated, they know instead of these numbers, they need to look at economic side, like how much revenue generate from there, what's the capital cost for generate each Bitcoin. So sometimes, the headline say you have XYZ amount of growth with hash rate, but when you look at do your math, you say, oh, actually, you are losing money. So that does not make sense as business, right? So eventually, not at least in 2025, people don't really care about the hash rate growth numbers that anymore. They were not based with that. So now 2025, we saw HPC and AI, and generally, or at least last year, people just listen to the headline, say how much like multi-billion. That's a huge number. So in some way, it hyped up the stock price. And later, then when there are more companies land a multi-billion dollar deal, then people start to ask a question. Okay, so what's the model? Does that really make sense? Who is going to pay for the cost? Because the HPC AI data centers are not cheap, actually much more expensive than Bitcoin mining, right? So people are going to ask who is going to pay and how much revenue or like a margin. So I think, there is a way, or there is a learning curve. Once people get more logic, then they probably would not add much premium to the stock price with the same type of announcement.
So I'm curious from both of you. I asked this question of Bob Burnett when I had a chance to talk to him, and he had a different answer than I thought he would. Do you see AI and HPC as a competitor to Bitcoin miners? Do you see it as a relief valve for difficulty not having to increase so quickly? Like how do you see the interaction between these two industries? Do you feel like they're competitors, collaborators, synergistic, winner takes all? Like how do you see that space evolving since we're all going after the same megawatts in theory?
How about Nico talk about that first? And
Yeah, sure. So I've talked quite a bit about this. I think it's not they're not obviously competing for power, but Bitcoin mining depends a lot on electricity and like is looking for the cheapest power out there. That doesn't always come with reliability, right? And data centers for AI HPC, they do need that high uptime and need a reliable power. So I think the AI HPC data centers will go after these bigger power blocks on grid, while mining gets pushed more and more to the edges. But I think also they can coexist, right? So now I'm working on a project, and there we are installing Bitcoin mining containers, and the idea is to start with mining and then slowly upgrade to higher tier data centers, because often Bitcoin mining data centers are called tier 0 or tier 1 data centers, while these AI HPC data centers are tier 3 or sometimes even 4. So I think it's and that's what you're seeing with the public miners also. Like Bitcoin mining is a good playground and base to learn how to operate the data center and then upgrade. And also that the fact that Bitcoin mining has that flexibility, has that flexible load, it can provide value to data centers that need a higher uptime. Because if there's ways to lower power prices by participating in demand response program, you can have this flexible layer on top of the firm load, let's say, and that allows these AI HPC data centers to still benefit from these programs while guaranteeing more stability for their learning programs.
Yeah, so I agree with Nico. So basically, Bitcoin mining and HPC data centers, they are looking for like a power, land, infrastructure, which miners already have. And but not every miner is going to convert into like HPC data centers, because there are different requirements. For example, reliability, network connection, and the capacity and other requirements. So physically, or there are some limitations really limit miners to convert. Obviously, in some case they can, but another thing is to consider is whether they have the capital to fund such even convert existing mining data center to HPC data center, right? Because I think it's a cost for building each 1 megawatt for HPC data centers average is $9 million. How many miners have that funds? And before you land any clients, it's like you have to invest a lot more. Even you physically you can convert, and also how to land once you have facility, how to land a client, and also you need a certain human resource to support very specific requirement, which is a different operation from mining. So now, yes, there are overlap, but I think there are paths for both sides, and there will, yeah.
And I think it's an opportunity for Bitcoin mining as well to become more decentralized, because there's quite a high concentration of hash rate amongst these mega miners, public miners. So if AI HPC goes after those public entities that already have these big contracts, and that power gets assigned to AI HPC, and then mining gets pushed more to smaller sites. I've already seen that last year, like AI HPC looking for 20 megawatts minimum, often 50 to 100 sites, while Bitcoin miners go to 5, 10, 20 megawatt sites.
Yeah, one has more flexibility than the other.
So the AI and HPC side, that's one of the fun shiny objects that we get to contend with. The other one that was very much in vogue in 2025 was the Bitcoin treasury company. We saw some public companies really go heavy on the AI route. We saw some public companies really go heavy on just raising money to build a treasury, or having a unique treasury strategy. Um, what do you think about that trend in general? Is it supportive to Bitcoin? Is it kind of a hidden risk that so much is getting consolidated in these public capital raising vehicles? What is your general sense on if that's a value creation move? Because it was shocking to me when I first saw Marathon raised hundreds of millions of dollars just to buy Bitcoin. It's like, what are you? That's insane, but also totally makes sense for you. So just curious your thoughts on that.
So if I only use one sentence to share my comments, I think Bitcoin treasury or other Ethereum or Solana treasury, or even Doge Celery, whatever companies support, I think they should be cherry on top, but not should not be the product
Mm-hmm.
itself. I don't know whether that makes sense. If a company, let me explain this. If a company, their whole narrative is raise funds and grow treasury, yeah, that works at first. As we discussed before, learning curve, and we see how successful strategy or micro strategy was last year, how they perform. But now, when more companies just do that route, well, people never heard about the company. They don't know what the business, what the value they really create. then I think that's dangerous. At first, obviously, narrative, some shining new thing is always attractive, but in the end of the day, does that really add value to the company, to shareholders, to the economy? So I just leave it there.
I think for miners it can be interesting, right? Like they can also use that treasury to borrow against to cover certain expenses, and I've seen also miners pledging their Bitcoin to acquire a new ASIC hardware. So I think
Yes.
from that sense, like it is a strategic move. Yeah, whether you should go all in on your Bitcoin treasury by raising funds is another one. But I definitely see that there's a strategic play there by yeah holding on to your Bitcoin and pledging it for ASICs or to get liquidity to cover certain expenses.
Yeah, I agree on that. So obviously, I think Bitcoin in treasury can be used strategically, but I don't think it should not be the whole narrative. You probably see some from the social media, some companies they just push that idea. So does that really make sense? In the end of the day, you would ask, and I'm sure now many more people ask a question. And another thing or new trend in 2025, uh, at least from mining companies, they also generate yields from their holding. So that's something new as well. So besides like mining, holding, or selling, they have a revenue. They also generate yield. So maybe that's another revenue stream.
Yeah, it's really interesting. It sounds like, and I would take this position as well. Just a Bitcoin treasury strategy probably isn't the most differentiated and successful model long term, but having a Bitcoin treasury and integrating that into your existing strategy can be a super supportive tool, especially if you've got access to deep capital markets and you've got some creative tools that you can use in the back end to grow the existing business.
Absolutely.
Is there anything, as I was reading through, this isn't lost on me just because I'm in the industry and I realize this in the back of my head, how much hash rate and how much computing exists in Texas. Now, there's other places where people locate miners and build facilities and have data centers. There's other hubs like Alberta and North Dakota and South America all over the place. But Texas is really a unique beast. Is there, do you see any sort of risk in either AI HPC, Bitcoin mining, just to these companies in general, that so many of them choose to be in Texas? And we all know why they choose to be in Texas. It's a great place to do business. There's lots of energy and great talent
Policy.
pool, great policy. But
Yeah.
do you see any problems with just how many of them choose to make that their home?
I did see the effects once again, especially in the summer when there's heat waves in the US and in Texas it can get very warm. Then many miners curtail because they participate in demand response programs. You've seen over the past 4 years that every summer, like in the northern hemisphere, there's a dip in hash rate because this big quantity of hash rate that's concentrated in Texas is coming offline or powering down. So you see the effects on the network, which I think is very interesting and. It makes it also interesting to maybe deploy in other countries in the southern hemisphere because you can make use of that period where difficulty might decline or is stable, let's say. So you do see the effects. I don't know if it's a huge risk if something happens in Texas that makes everybody want to go somewhere else. I think the network will survive just like it survived the China mining ban. So
Yeah, so I think concentration is always like a potential risk, no matter geolocation, because that happened before in China, right? And another thing, as Nico mentioned, like temperature or for some reason or heat waves or whatever reason or even storm, facilities need to power off, that really affect hash rate right now. But if they do HPC, they need to think about the alternative power line. That's something to consider. And then that also brings a huge requirement from cooling system. So people, I think before companies focus on air cooled, but now liquid cooled and other more innovative things come along to solve such issues. So, and again, who knows if there is a policy change and other black swan event happens, then we don't know. But there is always a possibility, right?
Yeah, I'm never sad to see summer happen in Texas since we have all of our facilities in the Northwest. Seeing everybody go offline, it's nice to have a little bit of breathing room because
Mhm.
that hash rate is just a never-ending, relentless march. I was excited to see on one of the pages where you go into comparing the hash rate growth year over year, and actually show that it's, even though it's still quite strong. I mean, the fact that we had a down year and hash rate still grew more than 30% in the year is wild. But it does seem like we're hitting the scale where it's just really challenging to get that compound annual growth rate to stay as high as it is in hash rate. Do you have any insight into what the future might hold, Nico, and just kind of retrospective on hash rate growth in general?
Yeah, so 23, 24, and 25 were very similar years if you look at nominal hash rate growth. So 23 was 250 exahashes being added, 24, 288 last year, 277. So it seems like that on a nominal term, like we're hitting a ceiling. And the great thing is that as the network grows, to add more in a percentage term, let's say, it becomes more and more difficult. So you see on the difficulty level that that year over year difficulty increase in percentage is slowing down. So that makes price predictions or revenue predictions a bit easier. And I think yeah, that's a positive thing. I expect next year to see a similar type of growth in nominal terms. But yeah, because of this high competition for power, we might see a bit of a slowdown, or at least a fierce competition for the power. Uh, and next to the power, it might also influence other aspects of the supply chain, right? So we've seen already announcements of shortages of gas turbines, for example. So this
Mm.
can also happen with data center inputs. That certain inputs become more expensive or have a longer lead time. So yeah, I think the competition for power goes beyond just that power contract. It can also influence other parts of the supply chain, which might slow down the growth. But I do continue, do expect a continuous uh, expansion and growth in the coming years, similar to what we've been seeing over the past years.
You mentioned the supply chain as well, and I'm curious, does that carry over into the ASIC market? Because we've seen in previous cycles, there's a boiling point where you just can't get access to hardware. Now at that previous time, there was really only one large manufacturer. So I'd
Yeah.
love to get your perspective. And the other weird thing is we've had pretty significant price increases in Bitcoin itself, but the ASIC market has been pretty quiet. Not a lot happening, pretty stable. I mean, we had a pretty significant drop toward the end of 2025 when ASIC prices followed Bitcoin price, but overall throughout the rise in late 2024 and early 2025, not really what we were expecting considering looking at how ASIC pricing changed in the 2021 market. I would love to get a sense from you of why that might be the case.
Yeah, I think in 2021 we also came out of the COVID crisis, right? And there was this yeah, the semiconductor supply chain was disrupted also. So that had to do with that shortage of ASICs. So now there's more ASICs going around, so there's a bigger supply. I also see that bigger miners have more influence on price. So it's not just the ASIC manufacturers setting the price, but it's also the ones that buy the ASICs that can determine price now. But what we've seen is that ASIC manufacturers have been self mining in accelerating pace over the last year. Cindy mentioned BitDeer before. That's a very good example. They've been deploying a lot of seal miners while not selling that much. I think right now, like the supply and demand side is different than in the previous cycle, and that makes it that these prices are more on the lower end. I also think, like, as we see these efficiency improvements slowing down, right? Like all the generations become, or let's say the current generation will survive a longer time. Let's say so. I think the rotation into new, more efficient ASICs will slow down because of it. Uh, yeah, and these ASIC manufacturers, they have like big contracts with the semiconductors to get access to these chips, and in order to maintain those contracts, what they need to do is either dump the machines into the market or self mine. So that's a bit what you've seen happening in 2025.
There's this shift that I've been noticing and talking about a little bit with people who work with us that seems to be coming over the industry, which is, we've already mentioned this is a very young industry. A lot happens very quickly, but there's a distinct psychological shift that I think is happening within the mining space. And whereas in previous cycles and previous years, it was this sort of leveraged upside on whatever you think Bitcoin is going to do, and sort of a room for lack of a better word, degenerate gamblers and speculators. To now, I mean, comparatively, you could treat it as sort of a boring cash flow business or utility business in many ways, and attracts a very different kind of person, both as an investor and as an operator. You're seeing this institutionalization, professionalization, the smoothing of volatility, sort of a speculator's nightmare. Nothing very interesting to 10x overnight anymore. But I'm curious if you agree with that, if that is across all sectors, or if you see any exceptions to that where it's still the Wild West.
Yeah, we've seen a hash price, which is the revenue miners make per amount of computing power per day, often measured in petahashes. We've been seeing that very stable post 2024 halving. So it's been ranging between the 40 and 60 dollars per petahash per day for the longest time. Right now we're a bit below the 40. And we've had not have that spike that we saw in previous cycles. So I think many miners before the halving were thinking, okay, we need to deploy now, we need to be online now, because there's gonna be this blow off top, this parabolic phase in the market, and that will have hash price spike. But that didn't happen. I think it makes the investability into mining more appealing to institutions because of it. It makes the predictability a bit higher, but yeah, it maybe less attractive to gamblers. But I think that narrative, why investing in Bitcoin mining is also it's changing a bit over time. So
Yeah, so from my observations, what I see is like previously, Bitcoin mining was more appealing to retail investor. For example, for hosting business or cloud mining data type, it was a pretty good business. But later on, we see less in terms of suppliers or like the service providers, but at the same time, I think less retail investors in terms of buying like hash rate service,
Mm-hmm.
but more institutional investors, because now for retail investor, hosting is still complicated, and they want to like quick gain. And we all know the price fluctuates a lot. So for retail investors, now probably buying Bitcoin is easier, more straightforward. But at the same time, for institutions, it's quite different because for them, they can trade it as a commodity, and they can use it as a financial tool. They can use as a tax. What's that word? Tax. What's basically help with the tax and other thing. And in long term, mining is still cheaper than you buying like a spot Bitcoin for institutions. So for my observation, I can see the change from interest from retail to institution.
Now, maybe Bo, you can also share with us. Like I've seen more small and medium-sized businesses also invest in that hosting space, instead of that individual investor. Yeah, you see these business holders leveraging their business and making use of those tax exemptions and the bonus appreciation. I've seen a lot coming by in the US. So yeah, maybe you can also share with us, like, what are you seeing on the hosting sites?
Have you ever felt like you've done everything right, built the business, made smart investments, and yet there's still one piece missing? If you're someone who believes in Bitcoin but hasn't yet explored mining, let me introduce you to something that most people never even realize exists, and that is fully managed Bitcoin mining with Abundant Mines. We help high net worth individuals like you own industrial grade mining infrastructure without ever touching the machines. It's hands free, professionally hosted, and designed to generate passive income by turning electricity into Bitcoin every single day. It's tax advantaged, it's asset backed, and for many of our clients, it's become one of the smartest moves that they've ever made in their investing career. So if you're ready to take the next step into real Bitcoin ownership, not just holding, but producing it at a discount, visit abundantmines.com. That's abundantminds.com, and see why this strategy is changing the game for serious investors. We're seeing exactly what I described and what you guys echoed, which is a completely different mindset and client profile of people that are looking at this. And the psychology shifting from this sort of speculative upside vehicle to really people who are looking at this as long-term infrastructure. And you mentioned it, Sydney and Nico. It is the the full spectrum impact of getting into mining. It's not just about what kind of upside can I get on mining itself. It's how do I build a long-term Bitcoin treasury the most efficiently? If I'm operating a business, how does that fit into my capital stack and my tax strategy? You know, you're seeing mining, at least in our world, emerge as just a component of someone's overall business strategy rather than being this sort of like pure play upside vehicle. And I'm pretty bullish on that happening across the board. I don't necessarily think everybody is going to start their own Bitcoin treasury company, and I don't think that that's a good idea. But I do think that by and large, companies will start to build Bitcoin treasuries, and they recognize, at least in the US tax code, how advantageous it is to put some physical equipment as part of that strategy and what that does for your balance sheet, what it does for your P&L. It's just a really interesting, rather than this sort of Wild West pioneering speculative vehicle for upside, just a very normal income strategy with computing equipment. And once people get outside of the oh that's Bitcoin, that's weird kind of mindset, it's very understandable. I mean, it's not so different than plugging in GPUs and running models. You know, that is its own income strategy with a little bit of extra setup and a little bit more complexity and higher entry barriers, but essentially the same. You know, you're just seeing people treat this as another way of generating cash flow in the Bitcoin space. And especially as we start to institutionalize in other ways, We see the ETFs gaining popularity. I mean, the most successful ETF launches in history were these Bitcoin ETFs. People are looking at other vehicles and realizing that there's more than one way to play in this space, and mining is just one of those ways.
Interesting. So the space is changing, including the people in the space, like who want to play or who want to use Bitcoin mining as a corporate strategy.
Yeah, it's a very diverse mix of entrants, from individuals to small businesses to institutions to uh, private equity firms and funds. Everybody is waking up to this space, and really, it's a privilege to get to exist through it, and especially to get to participate into it. Um, because all these people are learning about this asset that we've all followed for the first time, that we've been able to watch for years. And it's nice to get to share something like this with especially people who are smart, open, understand the world generally, but have never really been exposed to or spent time to understand this space.
So this reminds me of something that we might see in this year in 2026, is that last year we saw the miners adding a Bitcoin treasury strategy, but it might very well be that this year we see a digital asset treasury company first entering into mining to get access to Bitcoin.
Yes, that's possible. Because I know, like off the book, some big companies, some public companies, even they made arrangement with mining companies to acquire bitcoins. So
Yeah, so it's logical that the next step will be that they mine themselves.
I think that's too difficult because now it's quite competitive, and to set up everything by yourself, uh, it's
No,
challenging.
but an acquisition I would see happening maybe then.
Or another way, maybe maybe they acquire some mining company and go SPAC and merge and become
Yeah.
a still public company and has mining composite.
Well, the American Bitcoin story to me is a really interesting example of this, and you guys cover this in the report. Is one, they had an interesting way of actually listing and kind of
Yes,
roundabout, not having to go through the traditional listing process, but also that is an example to me of a company that is, quote, a Bitcoin treasury company, but they're also a mining company, but they're also a services company in some sense, looking to offer compute services. I mean, that to me uh, is a model I think we might see more of, is a Bitcoin treasury, not just as a business model and a North Star, but supported by these other business lines. That to me is the most sustainable way for Bitcoin treasuries to exist and thrive, is having these complementary ways of building it and supporting it with uncorrelated business lines.
absolutely. And for American Bitcoin's case, yes, if they went the traditional routes, it probably took years preparation to go public. But since they choose the very different way, and they got like a public pretty much in 6 months time, which is like a miracle. And they also choose like a asset light way by working with its parent company Hot 8. So I think that's a very innovative, and probably this year we see more innovative way of that, oh, as well as like business model. Not only like my Bitcoin, hold Bitcoin, but there would be other ways to generate revenue and to appeal to the capital market.
Mhm. So I'm an investor at the beginning of 2026, trying to just figure out what do I think about the world and how am I going to act on what I think about the world. what are you seeing as sort of like foundational principles, ways of thinking that are going to set people up for success in 2026 and beyond when they're looking at this space in particular? I mean, are you heavily looking at these companies that have a very forward AI position? Are you looking at any other metrics? Like, how can I navigate this space intelligently as an investor?
So first of all, HPC AI is trending now. So I think it's not a bad idea to allocate some of the resource there, but at the same time, don't only look at like big names already. Look at who has what resource. For example, the power capacity. Some haven't landed any big major deals yet, but they have extensive energy pipeline, and you know earlier we mentioned that miners have land, power access, and infrastructure that HPC or AI companies want. So obviously, if there is demand, there is a way to work that out. So there is potential. And I want to add that, for example, last year, digital was not on radar for many investors because they were small in terms of hash rate, right? But they had like a power pipeline, and once they landed some major deal, then the price exploded. Then becomes the top two again in terms of stock performance. So what I'm saying is, don't yes, look at what's the trend, but at the same time, look at what does they really have. And then you invest the one with potentials, not only big names.
What do you think, Nico?
Yeah, so I think Bitcoin itself is very interesting still because so much positive happened last year and price was quite muted. So I think it's only been an opportunity, or it's still an opportunity to get into Bitcoin because yeah, on the fundamental side, nothing changed, or if it changed, it was for the good and not for the bad. So. In that aspect, I expect to yeah to for Bitcoin to catch up. Obviously, I always look when I invest. I look out, try to look out at least a cycle, 4 years, to be on the safe side. But yeah, I think Bitcoin is still very appealing, even though yeah. Maybe the stocks, the mining stocks, and the HPC AI calls or partnership announcements have been catching some more spotlight. I think Bitcoin itself is still very interesting.
So, one of the best opportunities in any investment environment, any asset, is when you have high conviction in that asset and you believe the market is mispricing it, which I would completely agree with you. At this moment in time, Nico, it is hilarious to me that we can purchase a Bitcoin for under 100,000. And if you're mining, you're probably making it for significantly less than that. So,
Yeah.
huge opportunity. And then to your point, Cindy, uh, the fundamentals really drive these businesses. It's not just about how much hash rate you're installing or you know what is potentially on the horizon. It's installed capacity, it's locked megawatts, it's all in pricing, it's stability, firmness. I mean, all of these things that you just have to go a layer deep. They're not going to be broadcast on the PR Newswire reports, but they are going to be in those deeper dives into what's actually in the internals of these companies that can help people make decisions.
That's a pretty good summary. Could I steal that?
Clip it at will. What are you watching? Is there a single indicator that you're using to help you make decisions for how you allocate capital, how you advise people, how you speak to them about the market? Is there one unifying metric that you're like, if I see movement in this and in a certain direction, this is how I'm positioning myself?
So for me personally, this year I probably look at focus more on power pipeline or capacity, like what they already locked And I think once you have a pipeline, especially if you're a public company, it's relatively easier to get access to capital to make something happen. So no matter that's like a mining data center or HPC data center, I think it brings something to the company. But meanwhile, I don't want to allocate like a premium to like so probably last year, if some company has XYZ amount of megawatt, probably you assign premium to the stock price. But this year, personally, I'll probably apply a discounts to that as well, as the overall market is becoming more educated. So also need to do some math. Say how are they going to raise capital? How are they going to build? So not too many things to look at. But first of all, they need to have resource.
How about you, Nico?
Now I was thinking like the next halving, like even though the previous halving sounds very close by, like the next halving is going to be in 2028, a bit over 2 years from now. So I think also, yeah, when you deploy capital into ASICs, maybe the Q1 of this year is still a good time, but after that, you really need to look at your numbers and see if you can get a return before the halving, because yeah. What we've seen is that revenues have been cut in half, and it's going to be unpredictable what's going to happen. Especially because transaction fees have been very low this past year. So in 2025, the largest part of the year, it was less than 1% of the total block reward were transaction fees. So you cannot really depend on these transaction fees yet. So yeah, I would say even though the halving sounds very far away, keep it into consideration when you're investing now. And what I've been seeing in general is that yeah, more and more miners want to get closer to the source, right? So they go deeper and deeper into the supply chain. Let's say they go closer closer and closer to the power generation in order to get access to lower power prices and move from a pure ASIC buying to more infrastructure investments.
When you're putting together a report like this, and I'd highly recommend anybody listening reads through the whole thing. It's almost 100 pages, but it's very well laid out and easy enough to follow. But what I appreciate is in putting together something like this, you're naturally going to learn or adopt a slightly new lens of information that you already knew when you're compiling it. So for both of you, was there a particular takeaway, surprise, or change in point of view that you had as you were compiling and synthesizing this report? Was there anything that kind of altered your perspective that you can remember that sticks out to you?
Well, yeah, if I may go first, like I write on a weekly basis, so I've been writing throughout the whole year, so there were no big surprises. I would say I think more the challenge is to uh, cut out information, right? Like what we've put into the report is already a lot, but for example, I didn't touch upon hash rate distribution amongst pools and what's happening on the pool side. There's even more aspects that you could cover. So yeah, just seeing how this industry is really a very diverse ecosystem that you can be involved in so many ways. I mean, the work that Cindy does, that I do, uh, is very similar, but it's so different in many aspects, and that's why also this collaboration is such a great collaboration because we add value to each other. Let's say.
Yes, absolutely. So the same as Nico, I do like a weekly analysis. So every week I look at what's new, what's trending, or what attract like a topic. So I looked at that already. So when it comes to like an annual report, it's more like putting things together.
Mhm.
So almost you know what's going on at the time. The one thing I would say for annual report, you have, at least for me, I have to decide, what could be helpful for the reader, because during the year so much happened, right? And you want to pick things that people can see the same pattern, or they can have some come up with their own observations as well. Well, actually, I left out certain parts, but it's really, I really want to have a start point where, or some directions people can look at, and they can go deeper by themselves. And obviously, everyone has different perspectives. Then I think that will help them form own thesis on the same topic. So
Yeah, and I think even though it's a look back or a review, we also look forward in the last page or last chapter. But I do think just looking back at the year provides a lot of context about what you can expect in the coming year. So
Yeah, the last section is 7 predictions for 2026. So you don't have to go through all 7, but just curious, is there one in particular that you are hanging your hat on for either or both of you that you're really excited to see materialize in the coming year?
So, okay, I'm talking very critical stuff, nothing something exciting. It's just more like a warning or cautions if you are like a investor.
Mhm.
One, obviously, HPC and AI is still trending, and very likely in 2026 we'll see more like a hyperscaler deals, like I think that's very likely. But at the same time, don't put all the premium to the stock price. The price, I'll give you an example. So in 2024, Core Scientific was the first Bitcoin mining company that landed a major HPC deal. It was multi-billion, and the stock price went up a lot in 2024. And in 2025, earlier, probably in February, they actually increased the megawatts with their client, but the stock price didn't go up as much in 2025. So the same. Last year, we saw a premium assigned to miners with a major hyperscaler deal, and this year in 2026, we'll see more deals coming, very likely, but I don't think the price would go as crazy, increase as crazy as, or skyrocket as last year. So they'll still probably perform better, but people are going to ask a question. So just be cautious.
if I look at my outlooks, I think one of the most interesting things that I'm going to watch very closely is that I projected hash price using the month over month growth rate of current or last year's 2025 hash rate growth. So that's 2.52% month over month. That would lead to a total amount of hash rate of 1400 exahashes, which seems realistic in my opinion. But if we would continue on that growth path, Bitcoin has to cross 100K in order for hash price to recover back above the $40 per petahash per day. And right now we've been below that $40 level for over 6 weeks. So I think more than the depth is it's going to be how long will miners be able to survive that that's below $40 per petahash per day period. And then a part which was not in the outlook but at the previous chapters is the efficiency of the network. Coin Metrics has a great graph that shows the average or estimated efficiency of the whole network that has been getting worse throughout 2025, which is interesting. So the amount of joules per terahash that are being used is going up instead of down, and that tells me that miners or equipment is going to other jurisdictions where energy is cheaper. So I think if Bitcoin stays below that 100K and hash price stays suppressed, it might accelerate that push towards other jurisdictions and even more global industry.
Very interesting. Well, as we start to wrap up, I'd love to get any closing thoughts that you guys have around the report, around what you see in the industry in general, even some parting advice. You know, the audience is mostly investors, people who are looking at the space as a place for capital, for time, for energy. Any closing words of advice that you have for people? Just want to remind you, if you are listening to this and you feel like you just woke up at the beginning of 2026 and have no idea what's going on in the mining market, this report will get you caught up to everything you could possibly imagine, at least give you a foundation. So, highly recommend getting that, downloading it, and off to you guys for closing thoughts.
Yes, I would say it's a very long and dense report, but it shouldn't scare you from downloading it because it has many aspects. As I mentioned before, like it's a broad ecosystem. So for everybody, there's a piece of interesting information in that report. So I think everyone should download it. And then maybe a general advice. I've been giving this before, but Bitcoiners, in order to orange pill people, they say sometimes like get off zero. I think it's the same with mining. Like if you're considering to start mining, just get off zero, get one machine even, and that will trigger you to learn more. And I know that once you start mining, that you'll find this report very fascinating.
Yes, please. The report is long for many people. That's scary, especially nowadays. People don't like to read. But Nico and I, we tried our best to break down different topics. So no matter you are industry players, you are operators, or you are very new to the industry, or you are like investor, there is something for you. You can navigate by the chapter. So even if you don't go through every single page, you can pick, what's most relevant to you. And I think you'll be in a rabbit hole. You want to know more. And the same as Nico mentioned, if you are very new to this space, and the best way to start is to get your get your hands dirty. Even start with something small, play around it, and you'll learn a lot. And as we mentioned, mining is so fast changing, and it's not only for people who are hardcore like Bitcoin, and they they are like they know a lot about technical stuff. There are economic side as well. And one thing, if like institutions, large funds, they are coming to the space, uh, then like faster than ever, then maybe this is the new trend. You should not miss out. So don't just say it's Bitcoin mining. It's actually more than that.
Love it. And totally agree. You do not have to read the whole thing to get something out of it. There are many different ways in. And I will also say 100 pages sounds like a lot if it were all text, but you guys have a lot of great images, charts, diagrams, and I think those are worth their weight in gold. It's one of my favorite parts of opening up anything from Nico is I know that there's going to be a chart in there somewhere that's going to help me and my dense brain understand the barrage of numbers that this industry is known for. So very digestible, very readable. I think you guys did a fantastic job. Again, the link for that report is going to be in the show notes. And before we sign off, where can people keep up with what both of you guys are working on?
If you are an investor or if you are industry player, You can visit my website, bitcoinminingstock.io, and you can find the new weekly newsletters, or you can look at some comparison charts, or you can just use some of the tools on the website, or you can follow me on Twitter. So my Twitter handle is it's Cindy Feng. Thank you.
So in my case, it's also the website digitalminingsolutions.tech, where you can find all the blogs that we or the articles that we produce on the Insights webpage. And I'm very active on LinkedIn as well. So there's on LinkedIn I find that I can have the creative space to provide some long format insights. So follow me on LinkedIn as well.
Wonderful. Well, thank you both so much for spending some time with me. Thank you for breaking down the report, your
Thank
thoughts
you,
on the
Beau.
industry for our audience. Thanks for taking the time to condense what is a very fast moving and very information dense industry into something that people can digest. So excited that we got a chance to talk and look forward to seeing you both again. Thanks so much for your time.
Thank you for having
Thank
me.
you.
Have a lovely day.